Welcome to Real Talk, Real Estate Discussions with Andrew Kirsh. In each episode, Andrew interviews industry leaders. We'll hear their real-time opinions on today's market, their background and unique career highlights, and guidance for newcomers into the industry. You can find this show at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Now here's the host of Real Talk, Andrew Kirsh.
Episode 63 of Real Talk. Can somebody tell me what the 10-year Treasury is doing? The Federal Reserve reduced interest rates by 50 basis points a couple of weeks ago. And during that same period of time, the yield on the 10-year Treasury has increased by that same 50 basis points. Now, we have a full pipeline of deals across all asset classes throughout the country. And it will be interesting to see if this increase in the 10-year Treasury will impact any of those deals. Now, on the show this week, it is my pleasure to bring on Bill McMorrow, the chairman and CEO of Kennedy Wilson. Kennedy Wilson is a household name in the real estate industry, owning 38,600 multifamily units, having $27 billion under management, $8 billion in loans from the acquisition of Pacific Western Bank, and also another $3 billion in its own originations. They are a true juggernaut in our industry. Now, in addition to investing in properties, they invest in surrounding communities through their ESG programs and their social impact investment program, which includes their affordable housing platform, Vintage Housing. Now, their charity programs build on the causes that their employees have chosen to spend their time and money supporting, including a focus on education, veterans initiatives, children's health, and community investments. In total, Kennedy Wilson supports approximately 130 organizations each year. I hope you enjoy my conversation with Bill McMorrow.
Hello, welcome to another edition of Real Talk. I am here with Bill McMorrow, Chairman and CEO of Kennedy Wilson's, and we are here in Bill's beautiful office. Bill,
Andrew,
pleasure to have you on Real Talk.
good to see you.
I do so many of these podcasts remote, and it's such a nice treat to do it in person, the way conversations should be. So,
Happy you're here.
Yeah. So, Bill, anytime people think of Kennedy Wilson, talk about Kennedy Wilson, they're amazed at just the breadth of the company. If there are any viewers of mine who don't know who Kennedy Wilson is, if they don't know, they're probably not in the real estate industry. But for those that may not know Kennedy Wilson, please describe the company.
Well, to describe the company, I've got to give a little history. I mean, we started with some super humble beginnings in 1988, and we've had I would say a lot of good luck over the years. Going into different markets in Southern California. We went to Japan in 1994, became a very successful company there. We went to Europe in 2010, did pretty well there. And over the years, we've been able to expand the company outside of the Southern California area. But at the root of what we do today, our focus is really on the housing industry. And between our equity business and our credit business, we're either financing or have an ownership interest in almost 65,000 units. Everything else that we're doing, whether it's in office or retail or industrial, it's really done in an investment management platform. So what we've been really focused on the last 5 years has been growing our investment management business, which was basically nothing in 2019. And we now have, almost $10 billion of fee-bearing capital that we manage for other people. But the real focus of what we're doing is the housing industry here in the United States, all across the country, in Ireland, and in the United Kingdom.
So the 40 plus years that this company has been around, you touched upon it. We're sitting here in Beverly Hills, but You have assets throughout the country, assets globally, on the debt side, on the equity side, managing people's money, brokerage company, property management company. How do these ideas come into your head and say, today I want to go into Japan, tomorrow I want to go into Ireland? What is your thought process?
It's always the luck that has to happen in life. I think people take way too much credit for their own success by thinking that they're so smarter than everybody else, but there has to be a lucky event. And what happened in 1988 when I bought the company, we were a very small auction company that was basically working with banks. And I spent 17 years as a banker myself, lending money to Fortune 500 companies, lending money to real estate companies. I was lucky enough to work on the East Coast for 5 years of my banking career. And so when you think about Kennedy Wilson, a lot of what we do still revolves around the banking industry. And so whenever there was an economic correction or crisis, and I've been through 7 of these in my career, including the most recent pandemic, we always saw it as an opportunity. And in 1994, I got a call from a Japanese company that wanted to do an auction in the county, but they said, you've got to go to Japan and meet the bank because the bank has to approve the deal. So I went there, but being the old banker that I was, I decided to go meet as many banks as I could. And the conclusion was that, if you remember back in those days, you might not, the Japanese companies were buying real estate all over the United States. Sure. In fact, the Senate at one time in the United States Senate had wanted to pass some bills to restrict the ownership of U.S. real estate. Well, when I was there, I learned how they were financing all their purchases. And so the first time I went there, we decided to open an office in Japan. And the real lucky break in addition to going there was meeting a person that could add that office. And so all of these things over the years have been through, a lucky set of circumstances that we did something about. During the Great Recession, it was very obvious that the banks in the United Kingdom and Ireland had their hands full.
Mm-hmm.
And so I made a trip there for the first time in 2010 with a friend of mine that comes from a very politically connected Irish family here in the United States. And second meeting I had there, 25 that first week, and every meeting was terrible because their unemployment rate was 16%. Their 10-year bond rate was about 16%. I was telling the story about Japan.
Mm-hmm.
I said, we really like to build businesses in Kennedy Wilson that survive any economic correction. And in that second meeting, the guy said, I have an idea for you. The idea was we'd like to sell you the asset management division of the Bank of Ireland. We bought.
Right. What was your initial reaction?
I said, let's go to dinner.
Mm.
And went to dinner with him that week. We shook hands on a transaction, and that was the beginning of our business in Europe. It was a very, very small company, as it was in Japan, where we started from scratch. But the idea always across all our businesses was to build businesses that could go on and on and on, even past my time. And the same thing happened last year when the meltdown happened in the regional banking system because of First Republic and Silicon Valley Bank and Signature Bank. The banks, the regional banks across the United States were losing deposits almost overnight. People were transferring their deposits to the big banks, J.P. Morgan, Bank of America, Citibank, or to Treasury bills.
Mm-hmm.
And so an opportunity came our way. Luck. The transaction that we did from Pacific Western Bank was, one of the largest deals last year.
Yep.
And part of the great benefit of that transaction was the entire construction lending team. That sort of question came to us. And so now we took that acquisition of almost $5 billion and have done, by the end of this year, we will have done another $3 billion of construction loans.
Of your own originations.
We're originating.
Yeah. You used the word, a four-letter word, luck. Is it really luck, or is it the preparation, the experience, the organization, the employees that you have built over 30 to 40 years, and that deals come your way, and that you're putting yourself in a position, I guess, to be lucky? Or is it really just because opportunities are coming your way because of what you have built?
Well, it all starts with the people you have in any organization. And I am biased enough to tell you that we have the best people in my entire career that I've ever had here. And we have a very common culture in the company that is kind of immovable. That's the mentality of the company. The luck part of it has a lot to do with, once you've got the team together, then you have to build a reputation. Our reputation in the financial services industry, I would say around the world, where we've transacted with hundreds and hundreds of banks, is unblemished. And that we've always run the business as though you have to shake somebody's hand, and that's what has to happen. Sometimes it's not in your favor, sometimes it is in your favor. But once you shook somebody's hands, that's the deal. And that's what we've always done with the banking industry, and really anybody that's a counterpart.
So how many employees does Kennedy Wilson have now?
We have 240 employees at the company, but what's deceiving about our business is we outsource all of the property management. We outsource a lot of different things because we intentionally wanted to keep the corporate payroll team as small as we possibly could. But when you look through the construction that we do, property management, there's another 6,000 people that are somewhere on one of our properties.
So do you feel you're spending, well, let me ask it a different way. Are you spending more of your time on the real estate business, whether it's lending or buying, or are you in the people business in being the chairman and CEO of Kennedy Wilson and making sure the ship is running afloat?
That's a really great question. I'm in the people business. It's creating relationships inside the company and outside the company. That's our secret to success. And then, overlaying that with what I said earlier about being a handshake person and doing what you say you're going to do. But I think particularly the last 4 years have been the most unusual period in my career. I had been through 6 economic crises, and I'll never forget it. On March 17th, I had to give a speech to everybody in the company.
March 17th, 2020?
Yeah. First day that we were really remote.
And I bet being remote, yes, nobody liked it, but you must have particularly hated being remote.
I hated it.
Yes.
And on March 13th, when the lady who runs our HR department
Forced you home?
told me that we're going remotely, I said, "You're out of your mind." I said, "We're not doing that."
Yeah.
And she said, "Well, you don't have a choice." But I told everybody in 2020 that I've been through a number of these, and I said, what I can tell you is there's going to be a beginning, there's going to be an end. What I can tell you in this particular instance is that there's going to be unintended consequences from the actions that people are taking that none of us can predict. And the unintended consequences were, I would say, changing people's behavior, because everybody was remote, shutting down the world, shutting down small businesses like the restaurant industry and the hotel industry. creating supply chain shortages. And okay, so the only way to combat what was about to come, which was inflation, was to raise interest rates on top of that.
Mm-hmm.
And so we all got delivered a set of circumstances that none of us had been through, except that I had been through in 1980 a very high inflationary period of time where inflation was 14, where I saw them raise interest rates to 21%. So I knew that that was coming. And so in 20 and 21, we had to lock down everything, fixed all our interest rate costs. We bought interest rate hedges. We did anything we could to weather what was clearly coming.
So let me ask a question. I could ask so many questions based on that answer. In 2021, from January 21 to, let's say, May, June of 22, that almost 18-month period was the busiest 18-month period of my legal career, which now is almost 25 years. And in that 18-month period, the number of floating rate debt deals that I did easily, I don't know, 4-to-1 to fixed rate, maybe 5-6-to-1. Were you guys buying real estate and using floating rate debt, or were you locking everything?
We were locking everything. And so our average interest cost from that point on was slightly over 4%.
And how were you feeling? Were your colleagues saying, Bill, we could get debt 100, 150, 200 basis points cheaper. Our cash flow could be so much better. This is not the right direction, or were colleagues following your step?
Well, the colleagues in the company were. It was just abundantly obvious what was going to happen. And if you remember in the summer of 21, Powell made the statement, and the administration was really very vocal about the fact that inflation was going to be transitory.
Right.
But I was talking to other CEOs of companies. I was talking to a couple car dealer friends of mine, and the same message was coming back to me that we were suffering from supply chain issues even in the summer of 21. And there were shortage of cars, shortage of car parts.
Sure.
And so it was just obvious what was going to happen. And so we decided to, like I said, we either hedged or fixed, because I told everybody we're not in the interest rate playing game. We're in the spread locking game.
So I've got clients, as you can imagine, who the last 12 to 24 months, it's been a very uncomfortable time and continues to be an uncomfortable time, especially for office owners, even multifamily owner operators whose floating rate debt, their fixed rate period has expired and they need to refi, and it's challenging for them to refinance. So whether it's working out with lenders, obtaining extremely high preferred equity interest rates, trying to survive to 25. How is your portfolio? And maybe it's a question that I know what the answer is based on your prior answer, but overall, sitting where we are today, October of 24, how is the Kennedy Wilson portfolio?
Look, I don't want to sound like we don't have anything that we're dealing with, because as I said, it was the most unusual period of time I think any of us have been through. The hardest part was really dealing with all the different jurisdictions throughout the United States that were creating their own rules. You can do this, you can't do that, and so you had to adhere to all of that. It's been interesting to me. I mean, we at the property level, by the end of this year, we will have refinanced $1 billion of property level debt this year. I don't think our interest payment has gone up more than $2 million on all of that, because now interest rates are coming down, and So we haven't been impacted by interest rates as much as it was I would say the jurisdictional mandates that were passed down to us, particularly in the housing industry. And then it was just fascinating to me to see how different parts of the country, how our clients, those that were living in our communities, how they went about handling their own business. And so you could see very different behavior patterns in different parts of the country. But everything is held up well. I mean, and we own more office in Europe than we do here.
Do you feel that Powell has been able to create a soft landing, and that the recession fears that we've had over the last 12 to 24 months is really mitigated? And you touched upon what you experienced in 1980 of what, 14% interest rates.
No, inflation was
14%, and we're now back to under 3. I guess it's a long-winded way of saying, what are your thoughts of where the general economy is today?
It's hard to say, Andrew. I think that, and I'm not here to Monday morning quarterback what they did, but I think they were slow to react to lowering rates. If I would have been in that position, I would have started lowering rates much earlier. And they were hanging their hat primarily on the housing industry that, you know, the rent growth was 5, 6, 7%. Well, it wasn't at the field level. Trust me, it wasn't growing at those rates.
I've heard a lot of multifamily owner operators say the same thing, that the Fed was, I don't know where they were getting the data, but rent growth had subsided.
I think you have not, again, a criticism, but you've got academic people making these decisions. And we were seeing things right on the ground. And so I think they should have, if I would have been doing it, which I'm not, I would have started lowering rates early this year. What the outcome of this is all going to be, I don't know. There's still clearly a shortage of labor in what we call the hospitality industry and the service businesses. I can tell you, we are involved in a little bit of that, and it's not easy to hire today. So where all these people have gone, I have no idea. But we're not seeing anything in terms of the operations of our properties that would lead me to believe that we're going to have even a moderately hard landing. And so I think as long as they continue to, lower rates here throughout this year and into next year, I think we should be fine. It was kind of counterintuitive, and believe me, I have a lot of friends in both industries, and I love them. But the industries that benefited from this period of time were the insurance industry and the banking industry. There's higher rates, bigger spreads, fewer people writing policies. Like if you look at California, everybody at the consumer level and the business level, your costs have gone up a lot. So hopefully that will moderate some. Will help.
Yeah. So let's talk about how you're positioning Kennedy Wilson over the next several years. You indicated that you have an emphasis on housing. Talk about the types of deals that are attractive to you and the company, and the locations within the United States that you want to transact more in.
Well, we're fortunate to have two parts of the housing business. We have the equity ownership piece, and we have the credit piece. But when you look at what we've done over the last really 18 months, we've done very little on the equity side. the focus of our business has really been the growth of the credit business. And particularly, almost everything that we're financing is either multifamily, market rate, or student housing.
Mm-hmm.
And we've been able to do this at a period of time where particularly the regional banks, and in some cases the bigger banks, unless you have a relationship with them, they're not making construction loans. So our emphasis is to continue to grow that construction lending business at a time where there's not as much competition, but also at a period of time where the people that are building are the highest quality people in the United States. See, our average size loan is almost $90 million. And so the people that are having to put in $60 or $70 million worth of equity to get a loan from us, that is shrunk.
Sure.
So we want to continue to grow that business. We'll end up doing this year a little over $3 billion of new construction loans. And we, have an aspiration to do more than that next year.
Let's dive in a little bit on construction financing. We represent a lot of both developers and private lenders. And to me, the issue is not obtaining the construction financing. It's obtaining the equity to make it work. And I feel like the institutions are out of the construction game, that there's very little equity for my developer clients. And I help make strategic introductions within our client base between users of capital and providers. And now I'll make sure to introduce them to Kennedy Wilson for construction financing. But on the equity side, it's dry. So how are your borrowers able to find the equity for these projects?
It gets back, Andrew, to what I said earlier. These are the cream of the crop in terms of developers. And they are, whatever word you want to use, they're clever enough, connected enough, or whatever it is to come up with the equity. Because we're typically doing 55 to 60% loans to cost.
So I imagine a lot of preferred equity in
Some,
your
but
stacks.
you'd be surprised at the number of big companies that are still building that have access to equity, especially in these product-specific kinds of markets like student housing. We've become one of the bigger lenders in the student housing business around the United States. There's a lot of equity available to the student housing developers that have a history of success. And we just made a loan a couple of weeks ago at the University of Wisconsin. We did one at Cal, did one at Syracuse. We've got a couple other big ones, they're Big Ten schools. So there's still a lot of private capital that wants to invest in that sector.
In terms of the equity side, is there a goal that you have in terms of how much you want to put out over the next 12 to 24 months or maybe longer range?
Yeah, I do and I don't. I've never wanted to push that narrative. Because I learned really from my days in the banking business, when you start setting goals for people that involve how much money you're going to put out, how much you're going to do this, sometimes you can get bad outcomes because it clouds your judgment. So we're, if the right situation comes along, believe me, we're all over the market everywhere trying to find things that we can do. For our system to really work, the way we like to invest is to find things that are off market.
Sure.
And if you look, over the last 10, 11 years, we've done $40 billion of acquisitions. I'd say 70% of those have been through our own network. And so it gets back to really the first part of our discussion about creating relationships with people outside the company. so that they feel comfortable transacting with you without having somebody in the middle of it. And look, I love my friends in the brokerage business, but that becomes a pretty efficient process.
Yeah. Now, is Kennedy Wilson still in the third party brokerage or property management business as well?
We're not. We sold that company about 4 years ago to the management team. And I think they're doing well with it. It was just a business that for us, we had to narrow the things that we were focused on, and that was one that takes a lot of people and time, and we felt that there were other parts of the business we wanted to devote our time and capital to.
Sure. Switching the conversation here, it's a bit political. I'm not going to talk about our federal presidential election, but I'm going to bring it more local in the state of California and Prop 33, which could make a massive tidal wave shift in rent control of vacancy control, where a tenant, to those that aren't familiar, that there's a ballot measure in California, Proposition 33, that if passed, and if I have it correct, that if a rent control unit that would otherwise be able to go to market once a tenant vacates would stay at the same rental amount that prior tenant was paying. I don't know what the latest polling numbers are, but what are your thoughts of the state of California, Los Angeles, doing business here in the housing business, where landlords are seemingly under attack every year? So I guess the question is, what is your confidence of continuing to do business in this state?
It's a deep question.
We've got plenty of time.
I grew up here. I love California.
Both of us are native Los Angelinos.
I went to high school. I went to college here. I didn't really go anyplace else.
Yes.
I would tell you that we started almost 20 years ago diversifying ourselves away from the state of California. But the only reason we were doing it was because we saw the kind of jobs leaving the state of California and going, and there was more job creation in other markets. So like if you look at the greater Seattle market, and I can, go down the list of Microsofts and Amazons and Nordstroms and Starbucks and Safeco and all of these companies that are creating jobs. So for our business to succeed, there have to be two things. There has to be a great university system that's producing great young people, and there have to be jobs, growth in jobs. So Boise is a very, very good market, we're a good example where, we went there probably 10 years ago. Nobody wanted to be there. But Micron was there, and Albertsons was there, and they had a great university there in Boise State. So today, we're the largest owner there. It's say for anybody in the state of California, it's been increasingly more difficult to do business here. The big issue is the supply of housing. It's counterintuitive. It's true in every place that we do business. You have to create more supply. That's what keeps prices low. It's not rent restricting things, because over time, that's not the solution. So you have to encourage development. You have to make it easier for people to develop. That's what will make the housing need more affordable for people.
Do you speak with our government leaders about this? I mean, you are one of the leading companies in housing. Have they asked for your opinion? Do you get involved?
Look, I have enough to do in my day job. I think that the idea that you would put rent controls on is only going to discourage capital from developing. It's simple math.
Yeah.
Anybody the costs of building have gone up a lot. So in order to get a somewhat decent return when people have other options of where they put their money, you have to have a governmental system that supports that, whether that's low interest rates or whatever it is. I don't know that anybody cares that much about my opinion of what it is, but I'm sure that almost everybody that is in the lines of business we're in would feel the same way.
Yeah. Is there another big?
I didn't want them to shut down the state.
Yeah.
I thought that was a mistake, and I don't want to. It's kind of an anecdotal story, but I was asked by, I don't know if you remember, but the governor formed a committee at the beginning of COVID to think about how we would, handle it and reopen the state.
Mm-hmm.
94 people on that committee. And so one of the members of the committee said, would it be okay if I called you every Thursday before we have our get together to get your opinion on certain things? I said, absolutely, for sure. And I remember it was like the second week, called me up and I said, look, I have to tell you, some of the things you guys are thinking about are really, really going to hurt. You can't go hiking.
Yeah, they closed the beaches.
He said, Bill, didn't you just see we opened the beaches in Oxnard? I said, yeah, but you never should have closed them in the first place. And so it was this whole idea that you could close down an economy that's the seventh largest economy or sixth largest economy in the world. But to get back to your original point about rent control, I want people are generally fair with people. I really do believe that, and I've also learned over the years that the consumer speaks with their pocketbook. And they're very smart. The consumer is really smart. And if you're not charging it properly, if you're overcharging people for any service, they're going to go someplace else. And so you've always got to deliver a competitive product where there's service attached to it. Otherwise, it won't make any difference. The rent control or not rent control, but there's no mystery to why some of these cities, like Salt Lake City, Boise, Idaho, Albuquerque, New Mexico, why they're growing the way they are.
Any market or markets that you want to share that you feel maybe under the radar that you want to have more exposure to?
We're about to do a big project in Bend, Oregon.
Interesting.
Yeah. And so we're going to, we like these smaller towns.
Sure.
So that I think our equity business has pretty much always been west of the Rockies. Mm-hmm. But now that we have a national business because of our credit business, we have a lot of information about other parts of the country.
Sure.
And so you're going to see us over the next 5 years. We'll be growing our equity business in other parts of the country besides west of the Rockies.
In addition to that, and last substantive question, thank you so much for your time and allowing me to sit with you. Seemingly every few years, there's a major addition to Kennedy Wilson or a major shift, whether it's going public, whether it's going to Japan, Ireland, England, the credit business with Pacific Western. Is there something that's brewing over the next few years that you want to accomplish or want to get in?
Well, there's a lot we want to accomplish,
Yeah.
But I would say, Andrew, that all of those things you mentioned really came out of a particular moment in time. And, you know, I've kind of come to the conclusion that every 3 or 4 or 5 years, one of those things will come up on your radar screen. And then you just really, really have to do something about it. Like this deal we did last year, we only had 30 days to do a $5 billion transaction. We had to put 100 people on that transaction to really get to the right level of understanding of the portfolio. And so what the next one will be, I don't know. But there's always something. And you've got to just react to it and do something about it. And I would tell you the other thing that is just very, very important for us is that really not forcing people in the office, it's forcing them out of the office.
What do you mean by that?
Got to be with people.
Yep.
Just like what we're doing today. You're never going to find anything that's worth doing by sitting behind the iPad screen.
Yep.
And so that really for me is the, I'll call it the leader of the company, particularly the younger people in our business. We're really forcing them to get off of. I couldn't even calculate an IRR.
I want to ask you, and not be beholden to these things, to these phones.
Leave it someplace else.
Yeah.
Because it's not, look, I've had to try to break myself. I don't take that to dinner anymore. I mean, you get attached to these gadgets.
But you were mentioning that you don't or know how to run an IR calculation. So do you use Excel?
Wouldn't even know where to start. I always told them there's only 4 things that are important in our business when you add, subtract, divide, and multiply. You can do those 4 things, and then you have a decent memory, and you follow up. That's the hardest thing for us, I think, is when you have so many things going on, is are you following up to make sure that you get to a conclusion? But of course, you know, look, in my early days, the spreadsheet was done manually. That's what you did when I was at the banking business. So the young people, they have to understand how to do all of that. But
And walk the property, walk the neighborhood.
It's not going to create a career at Kennedy Wilson anyway. If that's all you're going to do.
So before we started our recording, we talked about that we share a passion, baseball. It's October. The calendar is now October 1st. Playoffs actually are starting right now as we record. Are the Dodgers going to let us down again? Because I don't count 2020 when we could not attend a game in person at Chavez Ravine. It's as if the championship did not occur.
I disagree with you on that point. We won the World Series.
We won it, but I didn't get to experience it.
I hear you. I had the good fortune, of being at many of the Oral Hershiser games.
Yeah.
In 1988,
Sure.
I think it was.
Yep.
And so I love the Dodgers. Are they going to disappoint us? That you know better than I do how small things in baseball.
Yeah.
What do they call it? The baseball gods.
Sure.
How look. Rojas hit into a triple play a week ago, which to
end the game.
And to end the game.
Yeah.
But he hit the ball hard. It just was 2 feet the wrong way.
Well,
so I don't know. Injuries are going to play a big part in it.
They are, and you mentioned luck earlier in the conversation. Luck plays a big part in sports, especially in baseball, because you could hit the ball right at someone, or you could hit a little dribbler and it's a base hit. But what I can say is what you've created here is not luck. It is, if I can say that, you built an amazing company that nationally and really globally has an unbelievable reputation. And it is truly an honor to be able to sit with you and share the stories. And hopefully our listeners can learn about, the experiences, ups, downs, everything from you. So I really appreciate you coming on.
Listen, Andrew, it's been my pleasure. I would disagree with it a little bit. There is a big element of luck, but it's what you do about it. But anyway, I've enjoyed it very, very much.
And hopefully I'll see you on Figueroa Avenue for the parade for the Dodger World Series.
If not at the Ravine.
At least at a game. Bill, thank you so much.
All right, Andrew.
All right. That's another episode of Real Talk. Thank you.
You've been listening to Real Talk, Real Estate Discussions with Andrew Kirsh. You can catch prior episodes at scholarkirsh.com and on YouTube, LinkedIn, Apple Podcasts, Spotify, Google Podcasts, and more. Thank you for your positive reviews, comments, and for sharing this show with others.